Now let's talk about customs. Now customs comes from the union list. It can be collected only by central government. Article 246 has three lists: union, state, concurrent list. Custom duty forms part of union list, and the power to levy custom duty is with the central government. That is, parliament will make the law with regard to customs. Now union list has given the power, and based on that Customs Act 1962 has been made. This is the main act which provides the provision for charge, and all the rate of custom duty are given in Custom Tariff Act 1975. This contains all the rates of customs. Earlier it was given in Customs Act, the rates were provided, but then they made a separate law for the acts in 1975. Now when we talk about Customs Act, section 12 is the governing section, which says that any goods imported or exported would be liable to custom duty. So the charging section of customs is very wide. The moment goods are imported, doesn't matter whether it is in the course of business, doesn't matter whether consideration is there, the moment it is imported or exported, custom duty triggers. Normally imports are liable to custom duty because the consumption is in India. Exports are generally not liable, but government can obviously levy custom duty. Now let's understand the procedure, because most of the thing we'll get to know in the procedure, which will be useful in all the other provisions. See, there is a small diagram to make you understand how does the process work. First step is arrival of the vessel or aircraft should always be at the custom port or airport, and the law also requires that before the goods arrive, electronically import general manifest and passenger and crew manifest has to be given. Now what is this import general manifest? It contains the details of goods which are being brought. Passenger and crew manifest, those who are coming to India. Now this has to be filed before arrival electronically, but when it comes to vehicle, you get 12 hours time after the arrival. You can fill import report in that case. Then the proper officer will give a permission. This is the proper officer. Proper officer will give a permission to the person in charge. Person in charge is the captain of the vessel or the pilot in charge. Entry inwards will be given, but this is given only in vessel, not for aircrafts. Aircrafts can land. Then once the vessel has come here, thereafter unloading will be done. Unloading of the goods is done at the port. Any goods which are not mentioned in the import manifest cannot be unloaded. And then the law says custody of the goods will be given to the custodian. These goods now will be under the custody of the custodian. Thereafter the importer's work starts. Here is the importer. Now importer has to file something called as bill of entry for home consumption if he wants to directly clear the goods. It is also possible that he wants to store it in the warehouse because he does not have funds now, and you can't keep it on the port because port is very expensive. Now the bill of entry for home consumption or into bond bill of entry. Into bond bill of entry is to send the goods to the warehouse. It has to be filed prior to the date of arrival, previous day to the date of arrival, including holidays. Say suppose it is coming on 16th, you have to file it by 15th. If it is coming on 14th, you'll have to file by 13th. Doesn't matter whether it is a holiday or not, previous day you should file it. If it's a holiday, file 5 days before. Sir, we can file 3 months before. No, the law has given a limit. If you expect the vessel to come within next 30 days, then you can file bill of entry for home consumption and keep it ready. Once you file the bill of entry for home consumption, you'll also have to pay custom duty. Now the time limit for paying custom duty is also defined. Self-assessed tax, You have to pay on the date of presentation of bill of entry for home consumption. The day you present the bill of entry, that day you have to pay. Otherwise, interest at 15% per annum will be applicable. Reassessed. Sometimes once you file the bill of entry, officer will say no, 10% tax you have said, actually 12% custom duty will apply, 2% you have to pay extra. Then he will reassess and send it back. If you agree to it, then you have to pay that 2% extra next day after the reassessment, after the receipt of reassessment. If you don't pay by next day, interest will start triggering 15% per annum. Sir, if I don't think 2% extra is payable, then you get into litigation. That's a separate discussion altogether. Once you pay the custom duty, officer will verify everything and give a order for clearance for home consumption. Now let's see what happens if you file into bond bill of entry. To move it to the warehouse, you'll have to give a bond which is thrice the duty amount. Bond basically to safeguard the interest of government. Proper officer will verify your into bond and then give a order for warehousing. Then the goods will be stored in the warehouse. After that, whenever you want to clear, you can file a ex bond bill of entry and pay custom duty and get a order for clearance for home consumption. This is how the process would work. Now, from the warehouse, you can also export the goods. Then you will not be required to pay custom duty, but that you will learn in warehousing chapter. So, you have two options. One, to clear the goods directly from the port. This is 6, 7, 8. Or you can also do 9, 10, 11. What is 9, 10, 11? 9, 10, 11 is basically storing in the warehouse. So you file bill of entry into bond 1 and then you give a bond, transfer it to warehouse, then file a ex bond bill of entry to clear the goods. All these processes will help us in understanding how do we compute custom duty payable. So either 6, 7, 8 or 9, 10, 11 can be followed. Now, payment of custom duty, there is an option to pay deferred as well. Deferred payment is also allowed for authorized economic operators. Now, authorized economic operators, those who have significant import and export transaction and are given that under the authorized economic operator program run by CBIC. They get a deferred payment, plus authorized public sector undertakings also get an option to pay custom duty on a deferred payment basis. What's this deferred payment basis? Whatever you are clearing between 1st to 15th, any goods which you are clearing between 1st to 15th, you can pay by 16th of the month. Those goods which are cleared from 16th till the end of month, you can pay the taxes by 1st of next month. So deferred payment is not a very big benefit, but at least you get some benefit. And if this is for March, if it is for March, then you have to pay the taxes by 31st March. Now, government has also introduced e-cash ledger under section 51A of Customs Act 1962, saying that you have to deposit money in the e-cash ledger, then through e-cash ledger you will make the payment of custom duty. E-cash ledger is exempted at ports where there is no electronic data facility or baggage, obviously baggage when you come from outside India at that point of time, or any duty other than the basic custom duty, social welfare surcharge, SWS, IGST. Other than these, if there is any other duty payable, that also can be paid from other than e-cash ledger. For everything else, e-cash ledger is mandatory. Then there's one e-credit ledger also. This e-credit ledger is for duty scripts. Say suppose you are an exporter. Now exporter would have incurred some taxes on his purchases. Other than IGST and C plus S, he would have incurred some other taxes. Government wants to give that also as a refund. Now they don't give that refund directly to your bank account. They give it in the form of e-scripts, electronic scripts. These e-scripts will get credited to your e-credit ledger and they are freely transferable. One of the examples for this is RODTEP, remission of duties and taxes on export product. So this will not be directly coming to bank account, it will come as a e-script. E-script, either you can use it to pay your basic custom duty, or you can sell that and transfer it to someone else. The other person will be able to use it against his imports and adjust it against his basic custom duty. This is the basic idea before with regard to e-cash ledger and e-credit ledger. Then there is transit and transshipment. See, what is the meaning of transit and transshipment? Transit is where the goods remain in the same vessel, but they are going to some other port, whether in India or outside India. Transshipment is where the goods are transferred to another conveyance, and that another conveyance is going to another port in India or outside India. Transit and transshipment both are allowed without payment of custom duty. So it can go to the next place. And if it is going to a place outside India, then no custom duty will be there. If it is going to another port in India, then custom duty should be paid in that another port. But movement during transit and transshipment is allowed without payment of custom duty. So if the vessel has come to Mumbai and it is also carrying some goods for Chennai, during this, once it touches Mumbai, no need to pay custom duty, and Mumbai for Chennai goods, tax will be in Chennai. That's what the law tries to say. Plus, this transit and transshipment movements, there is no need to generate e-way bill as well, which we learnt in e-way bill exceptions, saying that no need to generate e-way bill in these cases. Then, once you talk about transit and transshipment, the next area of discussion is with regard to export procedure. Obviously, export procedure is not generally asked, but you should at least know the process so that if a question is asked on a practical side of solving, you know the terminologies at least. Export procedure, see, first you will file a shipping bill to the proper officer, and proper officer, the vessel in which these goods are going to go, proper officer would have given a entry outward to the vessel, and only that vessel which has entry outward, only that vessel's name can be written in the shipping bill. Then officer will pass a order for clearance and loading of goods. Once the order for clearance and loading of goods is completed, thereafter the loading of goods will be done. Once the goods are loaded on the conveyance, the person in charge, that is captain of the vessel, person in charge will issue a export manifest and give this to the officer. Let me tell you, import manifest, export manifest, if you fail to furnish that, penalty 50,000 on the person in charge. Plus, if there is any short landing of goods, penalty twice the duty amount. Once export manifest is filed, officer will give a leaving permission. Provided all the taxes on stores or any penalty which is payable has been paid, then the leaving permission will be given, and once leaving permission is given, the vessel will sail to its destination. That's the export procedure. Now, some important judgments in regard to custom basics. You should know that, say suppose you are supplying to SEZ. Supplying to SEZ, whether export duty will be applicable? The answer is no, because though SEZ is regarded outside India, but export duty will be applicable only if technically it is outside India. It's not technically outside India, I mean physically it is not outside India, and that's why export duty, as there is no charge either in SEZ Act, neither SEZ Act says that export duty will apply, nor Customs Act says, because Customs Act clearly says that a transaction can be regarded as export only when the goods are going outside India. And actually, is the SEZ outside India? No. For the provisions it is regarded, but actually it is not outside India, and hence export duty will not be applicable. Plus, a classification given at a particular point of time through a circular will hold good even for a prior period if there is no change in the entries in the Custom Tariff Act 1975. Plus, there is no time limit for filing bill of entry. Even if bill of entry is filed late, still even after 30 days, then also if the goods are there, then bill of entry is considered to be valid. It's obviously with prescribed late fee. What is the late fee? See, bill of entry you have to file on the previous day. If you don't file it prior to the date when the vessel is arriving or aircraft is arriving, then the late charges are 5,000 per day for first 3 days and 10,000 per day thereafter. Plus, the maximum late payment charge, late filing charges is subject to custom duty payable. Obviously, maximum is restricted to custom duty payable. Otherwise, this prescribed charges will exceed the total custom duty payable, which is not the intent of the law. These are the judgments and provisions related to custom basics. You should also remember that importer may be a person who is importing or who holds himself as an importer plus a beneficial owner as well. Like say suppose you have done a high sea sale or warehouse goods sale, then the person who has bought the goods, he will also be regarded as exporter. Same thing in export case, beneficial owner is also regarded as an exporter, like a merchant exporter or a manufacturer exporter will also be regarded as a exporter of goods. So this was about custom basics.